Hi everybody, this is Thomas with the quarterly market review for the third quarter of 2019. And here's a summary of asset classes for the quarter. And US stocks were up, developed foreign was down a little bit, emerging markets down, real estate up, and bonds, US and foreign, were up. I've highlighted emerging markets versus global bonds to demonstrate how volatility and risk is rewarded. You can see that quarterly returns are higher for emerging markets, which are much more volatile. The volatility is demonstrated by the best quarter versus the worst quarter, 34% up in a single quarter, 27% down. But returns are 11.2. So for taking the risk in a very volatile and risky market, you get rewarded. For safety, people go to bonds. They have lower quarterly returns and, of course, lower annualized returns, but there's much less stress and anxiety. So it's just a good way to demonstrate how risk is rewarded if you can handle it. This is a longer term period for all the asset classes. You can see we have mixed returns in the 1 year period, but over the 5 and 10 year period are in a very long bull market right now, and 5-year returns and 10-year returns are positive across all asset classes. So this is a chart of world stock market just for the third quarter, and you can see all the news. There was a lot of bad news during the period, but investors still were buying stocks. So there's a lot more going on behind the scenes than just the headlines. And global macroeconomic news, population, technological innovation, and participation by more people in the economy is what's going on behind the scenes. And this is the world stock market for the past 12 months. And it's got a longer period in this inset. And you can see that we've had the two bear markets in 2000 and 2008. And then we've had this long rise from about 2009 to the present. And the news associated with the path of the market. So these are world asset classes. And almost everything that was up was US based, and everything that was down was foreign. And you can see that in the other slides. And if we look at third quarter returns, growth did better than small, large did better than small, but value has started to perform a little bit better. And as you all know, we overweight our portfolios. We tilt our portfolios towards small and value as they outperform over time, even though over the last 10 years they have not. But over long periods of time they do, and we're getting a little bit better performance from our overweight in value. In international, everything was down on the international side. In US currency and local currencies, there were some rallies, but down over the quarter. Emerging markets took the biggest hit in this quarter, and there have been pretty poor returns over time. And every asset class has its day in the sun. There have been times when emerging markets were the hot asset class with long periods of outperformance, but lately they've been underperforming. And this is index returns by country. On the left are the developed countries, and on the right are the emerging market countries. And it was a relatively flat for the US, but you can see that there were many, many countries that had very, very difficult returns, both in developed and emerging markets. We have the only commodity that we have as a single holding is gold miners. Gold continues to perform well. We usually hold 1 to 2% in gold miners at certain prices. When it gets to a certain level, we accumulate about 2% gold, and it's at the high end, and we're selling and locking in our gold position right now for appropriate accounts. This is the editorial that DFA writes, and you can read this at your leisure. I always find these helpful. There's a chart at the end of this, which is basically, even though we've had this very long bull market and valuations are high historically, if you look at 1 year returns after long rallies. 1-year returns following long periods like this have been good. Even 3-year returns have been positive, and 5-year returns. So the intuitive feeling of getting out is not always lead to a good outcome. So hopefully you can take some time and read the data. And I hope you find the material helpful. And if you have any questions, you're welcome to call me anytime. Thanks a lot. Bye-bye.